Hello learners, welcome to the course of Management of Financial Institutions, Market and Service. I am Dr. Deepika Tomar, Associate Professor, Directorate of Online Education, Manipal University, Jaipur. Today we are going to discuss about equity and debt market. A marketplace where shares or stocks of companies are issued or traded through a recognized stock exchange or through over-the-counter market is known as equity market, whereas debt market is a place where buying and selling of fixed income instruments takes place. Debt market is also known as bond market. Dear learners, at the end of this topic, you will be able to discuss the equity market, explain the characteristics of an equity market, identify the different types of equity market, discuss debt market, explain the characteristics of debt market and identify the different types of debt. Characteristics of equity market. It is an organized body. Trading takes place through brokerage. It deals in public companies' stock. Supply and demand affect the stock price in equity market and it also introduces companies' stock on the stock exchange for the sale. Here we have a look on different types of equity: common stock, preferred shares, contributed surplus, retained earnings and treasury stock. Let's discuss them one by one. Common stock. Common stock provides the stockholders or shareholders the right to certain company assets and control over the company. It offers greater capital gains. Preferred shares. Preferred shares offer defined dividends. These shareholders are paid out before common stockholders. Main offer features are convertibility and call provision. Contributed surplus. Contributed surplus represents any amount paid over the par value paid by the investors for stock purchases that have a par value. This account also holds different types of gains and losses resulting in the sale of shares or other complex financial instruments, also known as additional paid-in capital. Amount paid by investors are above the par value and changes in the case of company's gain or loss. Retained earnings. Retained earnings is the portion of the net income that is not paid out as dividends to the shareholders. It is instead retained for reinvestment in the business or to pay off future obligations. Hence, retained earnings account for the portion of the net income that is not paid out as dividend and company uses this amount to further invest or reserve for future needs. Treasury stock. It is a kind of contra equity account. Treasury stock depicts the amount of common stock that the company has purchased back from its investors. This is reflected in the books as a deduction from total equity. So, main features here are purchases stock back from common shareholders, accounts for the amounts paid to buy shares back from the investors. Accounting books record this as deduction from the total equity of the company. Now we will discuss about debt market. Debt market is a marketplace where investors invest in debt securities, which are brought into the market either by corporations or by the government. Debt securities are raised for paying down debt, maintaining business operations, expanding product lines, etc. Now let's discuss the major characteristics of debt market. Debt market finances the development operations of the government. It mobilizes and allocates resources in the economy. Debt market reduces the borrowing cost of the government and it also develops the heterogeneity of the participants or investors in the market. Types of debt securities or debt instruments. These are corporate bonds, government bonds, municipal bonds and mortgage-backed bonds. Corporate bonds. A corporate bond is a bond issued by a company to raise finance for a different type of reasons like to expand ongoing operations or to go for mergers and acquisitions, etc. The term is usually used to long-term debt instruments with maturity of at least 1 year. So, corporate bonds provide maturity period of at least 1 year and these bonds are issued for various reasons such as business expansion, financing current operations, etc. Government bonds. Basically, government bond is a debt obligation issued by the government of the nation itself to help in government spending. Government bonds are also known as sovereign bonds. They are quite attractive to the conservative investors and considered to be least risky. Municipal bonds. Municipal bonds is a type of bond issued by the local government including local or state or even the bodies created by the local or state governments. Normally, these are issued for arranging the funds required for urban development. So, here the main features are municipal bonds are issued by government owned entities. These bonds are attractive to the qualified tax-conscious investors and classified into two types, namely general obligations bond or revenue bond. Mortgage-backed bonds. These are mortgage-backed bonds consist of pooled mortgage or real estate properties. These are the types of asset-backed securities and pays interest based on monthly, quarterly or semi-annually basis. Dear learners, in this topic you learned equity market is a marketplace where stocks and shares of public companies are bought and sold. Preferred shares have features like convertibility and call provision. Debt market develops the heterogeneity of the participants, investors in the market. Government bonds are issued by the government-owned entities. MBS consists of pooled mortgages on real estate properties. Thank you and happy learning.